Hello, good morning to all. Welcome to today's Daily Dose of Market Insights, brought to you by OANDA, presented by myself, the Senior Market Analyst of OANDA Asia Pacific, Kelvin Wong. So, very good morning to all. Today is Thursday, 19th of October. So, before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. Okay, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposit. This documentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so now, before we start our daily dose of market insights, these are the key takeaways. Over here is to recap of key highlights and events that took shape yesterday. What are the key data releases and events to watch out for? And to round out, most interestingly, is the short-term technical analysis outlook, where I will actually cover the broader-based asset classes, ranging from the broad-based indices, the FX, as well as key commodities market. Okay, so now let's, without further ado, let's kickstart what happened yesterday. So yesterday, what we could see over here is a rise in the geopolitical risk premium. So those who actually followed our daily dose of market insight, this shouldn't be a big surprise for you all, because we did highlight that this geopolitical risk premium is rising since the start of this unfortunate events in Israel and the Hamas conflict that could potentially spill over to a much more wider kind of ramification towards the Middle East region, and potentially the strategic choice of a weapon to actually use as a negotiation or bargaining chip will be oil price. All right, so what happened yesterday over here is this. Okay, let me share my screen for you all to see. All right, okay, so let me hide myself. Okay, so you all could actually expand the screen now instead. Okay, so what he did over here is that initially this was supposed to be a positive event where Biden wanted to act as a peacemaker to actually get more of the various stakeholder to actually diffuse this Israel-Hamas conflict. But however, there's this Gaza blast over here is that on a hospital. So you all know that hospital is pretty much sensitive, where hundreds of people died, unfortunately. So right now, the blame game started. At this point in time, no concrete evidence who is the culprit of this blast, Israeli or Palestinians. But most importantly over here is that the key stakeholders, Arab, means we're talking about Iran, Saudi, they pull out of the plan between Biden and Israel. So all in all, I could see over here is that this tension start to flare up, and with the Arab leaders not actually involving in any peace talk over here, that means there's high chance that this conflict will start to actually be prolonged. And once start to be prolonged, there's a lot of unknown, especially with various stakeholder that has a say in controlling the supply of oil prices that could be used as a bargaining chip, especially with Iran coming into the picture. So all in all, I could see over here is that higher oil prices, and most importantly over here is that with US itself now dragging itself into another what I call a potential a strategic proxy war. I would say Ukraine, Russia, that's still ongoing, and right now is Israel and Hamas. And with that, it will actually widen the US budget deficit, because you got to spend more on weapons to be sent over to Israel at this point in time. So that actually also drive up the US 10-year Treasury yield. So if you look at the US 10-year Treasury yield over here, it's no longer a safe haven asset right now, because by right, if you look at the choice of this kind of geopolitical risk haven, geopolitical premium rising, people will tend to flood into safe haven instrument like US 10-year Treasury bond. But however, people are now selling bonds instead. So it actually causes the rise in that US 10-year Treasury yield to pierce above 4.9%. And right now we are en route to the inevitable level at 5.2% potentially. So why is it important? Because the US 10-year Treasury yield, this is a daily chart, is the global benchmark for risk-free rate. That means we're talking about our longer term loans, corporate loans, personal loans, is more or less indirectly tied to the US 10-year Treasury yield. And also with the US 10-year Treasury yield inching up much higher, above 5.2, coming close to 5.2%. And most importantly over here is that with the Fed, there is no clear sign of indication that they're going to cut rates pretty soon. And I do believe that they can't cut rates right now. Why? Because of higher oil prices, and higher oil prices will eventually lead to higher inflationary expectation. So their hands are tied at this point in time. So eventually, potentially, this longer term major uptrend and medium term uptrend of the US 10-year Treasury is still intact. The next resistance 5.2. Overall, higher cost of funding doesn't look good for equity. So that's why we start to see a sell-off in the US benchmark stock indices yesterday. Almost a sea of red on the higher component sector, especially the long duration technology sector, where Nvidia continued to actually bear the brunt, negative 4%, Apple negative 0.7%, even the banks starts to close in the red as well. All right, so all in all, right, what we could see over here is with the exception of energy and some of the defensive consumer staples and defensive play that's holding the fort, but don't bear in mind that energy is only less than what, I think what 3%, and the consumer defensive is only 4% of the sector weightage in the S&P 500. So all in all, the US stock benchmark indices plunges in the red yesterday, negative 1% to negative 2.1%. So the worst hit is the Russell 2000, down negative 2.1%. Those are the small cap stocks that has weaker balance sheet. That means they are more heavily leveraged. So that actually explains why they are underperformance of negative 2.1% yesterday, given the fact that the US 10-year Treasury has cleared above that 4.9% resistance level. Okay, so now FX space. If you go into the FX space over here very quickly, let me share with you the FX market. So the FX market, right, at this point in time is rather mixed. We do not see this is a rolling 5-day performance as of now. So there's no clear dollar strength throughout the board. You see dollar doesn't strengthening against the safe haven currency, which is the Swiss franc. Kind of sideways against the dollar yen, but strengthening pretty much strongly against the Kiwi, and now it starts to actually strengthen also against the Aussie and the sterling dollar, and also against the Sing dollar as well, surprisingly, but not so much against the CNH. The CNH kind of go sideways at this point in time. So if you look at the current Chinese yuan at this point in time, right, very quickly, right, let me share about the Chinese yuan. So the Chinese yuan is still stuck below the upper limit of the range that is in place since end of September at 73280 level. Not entirely to, unless we still see a clear breakout of this level, then we see a much more substantial dollar CNH strength coming in. Because why? Because right now there could be signs of further targeted stimulus policy potentially enacted by China's top policy maker. And also on the other hand, there's also a continuous what I call weakness on the China property sector. Later I'll share with some key events that taking shape on the China property sector. Okay, so other than that, right, let us focus now on the US. Now talk about FX markets. Therefore, sure, gold and oil prices going to rally. So later I'll share you more on the short-term technical outlook chart on gold and oil. So now other key events that took shape over here is the US earnings. US earnings was said Morgan Stanley shares plunges. So MS plunges close to about negative 7% because of profit mix, profit, what you call it? Its Q3 profit actually missed expectation. Very similar for another one is Tesla. So Tesla is one of the top 10 component stock in the S&P 500 and the Nasdaq 100. So Tesla also missed their earnings expectation as well. And that actually causes Tesla shares to actually tumble in the after hours because Tesla released their earnings after the US session closes. So it tumbled by negative 4%. okay, continue to actually it closed down negative 4.7, negative 4.8% during the normal US session. After hours, going to inch down much lower after their what you call it, lackluster earnings release. So, but one thing positive over here is Netflix. So Netflix actually give pretty much we call it it continue to raise their subscription prices, and their earnings managed to beat expectation. And given the rise of their upcoming subscription prices, it causes the stock to actually rally by up to positive 12% in the after hours spike up. But do not forget, Netflix over here has a very huge market cap right now in the S&P 500 and even the Nasdaq 100. So you look at the Netflix, it's this small little box over here. So they are positive plus 12% increase, right, doesn't actually translate to a significant spillover to the S&P 500 and the Nasdaq 100. If you look at the price action right now trading in our platform, where we take our chart based on the futures market. Okay, so this is the key things to look, key event that took shape yesterday. And also one of the key risk event out from China is Country Garden. So Country Garden yesterday, their offshore debt coupon payment, the expiry deadline, they expired, so they actually have close to 15 million coupon payment that is going to be paid out. So yesterday, not a single cent of it being paid out, and yesterday was the due date of this grace period. So right now, technically, we're saying that Country Garden right now is the default risk is there. Yeah, technically, the coupon bondholders could actually take them to court and actually we call it suit them for default. Yeah, technically, because the caveat is a default clause has already been met by failure to make any payment beyond after the expiry of the grace period yesterday. So that's actually one of the reasons also keeping market pretty much tension on the China proxy stock indices, where the Hang Seng actually plunges today right now below the short-term neutrality level that we highlighted yesterday, the sideway lower limit of the sideway range. Okay, so other events to look out for in the calendar is yesterday we do have this UK inflation number that is out. So UK inflation number, right, even though they actually came slightly above expectation of just 1 basis point only, 6.7 versus 6.6%. Then the core inflation also came in slightly above expectation, 6% versus 6.1%. But nevertheless, yes, the sterling dollar spike up, but they actually spike up right at the 200-day moving average before the sterling dollar going to sell off within our bearish bias condition. All right, so later I'll share with you the chart of the sterling dollar. Still no change. The bearish bias condition still resume after yesterday's price action exposed CPI data release. All right, so what are the key data to look out for and events to look out for today? So today in the calendar, right, if you look at it over here, at this point in time, there is one data that just passed over here in Australia just recently, 8:30 a.m. So in Australia, right, there's this full jobs data. So the jobs data came in below expectation. So market is expecting 20k of jobs to be added plus 20k, but only a very lackluster of plus 6.7k. Okay, then for China housing price index, there's going to be lackluster as well. So the forecast was actually a slight tick up to positive number, 0.1% year on year for the month of September, but however it remains in negative territory of negative 0.1%. Okay, so up next during the European session, over here there's no key data out of the European session. So for US session is pretty much quiet as well, except for one data which is this is not really that key, which is the Philadelphia Fed manufacturing index that's up at 8:30 p.m. Singapore time, and we have one Fed official speaking, Fed Jefferson. He's speaking later at 9 p.m. Singapore time. Okay, so this is we have existing home sales data as well that's out at 10 p.m. Singapore time later. So these are the key data and events to look out for today. And now let's immediately jump on to the technical analysis chart. So let us start with the benchmark US, the benchmark indices first. Okay, so let us start off immediately with the where is the data? Yes, so now let us start with the Hong Kong 33 index. So for the Hong Kong 33 index, right, if you could recall, Yesterday we have a neutrality range between 17,675 and 17,880. Price plunges below the lower boundary of the lower neutrality range during the US session yesterday and validated that short-term bearish bias condition. So price going to plunge lower today and hit the support level at 17,450 slash 17,320. So RSI, yes, at the oversold level, but no bullish divergence on the RSI. So potentially we may start to see only a minor bounce before the price action continues to potentially to see the next support level at 17,060. So given this sharp push down in price action, so I could actually tighten the key short-term pivotal resistance right now. So in fact, I started to do this in the early start of this morning. So given price action to plunge lower, so my short-term pivotal resistance right now will be at this 20-day moving average and also the yesterday's lower neutrality range support now turns into a pullback resistance at 17,680 level. Okay, so this will be my key short-term pivotal resistance for today. Okay, so as long as these levels is not surpassed to the upside, potentially we could start to see a further slide down towards the next support level at 17,060. And also given the backdrop of that potential lingering default on China, country garden that could actually have a negative spillover to the Hong Kong 33 index as well. So however, if you start to see an hourly close above 17,680, then this short-term bearish bias condition will be validated to see a squeeze up towards the next resistance level at 17,880. Okay, so that's for the Hong Kong 33. So now moving on, next will be the German 30 index. So over at the German 30 index over here, you see price action continues to tumble much lower, breaking below the 15,045 level. So with that, right, I will right now have a tighten key. So right now, because the German 30 is not open yet, I don't want to tighten it so much towards 15,135 level. So because it may start to spike up during the opening session of the German at around 2 p.m. Singapore time. So given the fact that the futures market is yet to open, so I will actually still use the 15,290 as my key short-term pivotal support for now, unless during the 3 p.m. mark, price is going to come down much lower, then I could tighten it to 15,135. So right now I'm still using at 15,295, looking for a push down towards 14,930. A breakdown below this level could potentially see the next support coming in at 14,825 slash 14,760. So this is actually the lower limit of this medium-term descending channel that is in place since 31st of July. Okay, so however, if you start to see a squeeze up and an hourly close above 15,290, then this short-term bearish bias condition will be invalidated to see a retest of the resistance at 15,410 and even the 50-day moving average that confluence with the 12th of October swing high area at 15,560 level. Okay, so still maintaining that bearish bias condition on the German 30 index, Wall Street 30, which is the Dow Jones Industrial Average. Okay, so right now, price action now going to break down below the 20-day moving average already, looking for a next test on this minor conjunction area here at 33,510 level or 33,000. Okay, 33,510 level. So with that, right, I'll be okay. So given the price has started to also break down below the 200-day moving average as well, so I'll be using a slight tighten key moving short-term pivotal resistance for today. Okay, at this level here, 33,910. Okay, so 33,910 level will be my key short-term pivotal resistance for today. Okay, this level here. Okay, looking a breakdown below 33,510 potentially sees a further slide towards 33,160 for the Wall Street 30 index. But however, if we start to see a breakup above this 33,910 level, okay, we will, so let me put it here. Okay, so we will start to see a potential squeeze up to retest this we call it this current week to week high, which is Wednesday's high at 34,160 level. We also confluence with the 50-day moving average acting as a resistance as well. So still maintaining that short-term bearish bias on the US Wall Street 30 index with a tightened key short-term pivotal resistance now at 33,910, which confluence with the 200-day moving average acting as a resistance as well. Okay, now Wall Street, we're done with the Wall Street now, Nasdaq 100. So Nasdaq 100 price action continue to inch down much lower. So I'll be using this level here, which is close to the 50-day moving average. So now price action is breaking down below the 14,910, 920. So yesterday 14,920 was our key short-term support level to watch in the first sight for that short-term bearish bias condition. So price action going to inch down lower. RSI, no clear signs of a bullish divergence yet. So indicating that downside momentum still remains intact in the short term. So I'll be using a tightened key short-term pivotal resistance right now for today at this 15,090 level. Okay, 15,090 level. So this will be my key short-term pivotal resistance level for today. Looking for a push down towards 14,825 / 14,740. So 14,740 is this key, we call it a medium term ascending channel, ascending trend line support level that is in place in place since 28th of December low. Okay, so this is a pretty much key support level to watch. A break below this support level potentially could increase the odds that we call it that rally that was seen last December low all the way up to July high is more like a corrective dead cat bounce rally, and potentially the next step is for the start of a multi-month major downtrend leg on the Nasdaq 100, which could also translate it to the downtrend leg for the Russell 2000, the S&P 500, and the Dow Jones Industrial Average, given that the Nasdaq 100 is the market leader. Right, so that is for the Nasdaq 100. So, but if we start seeing hourly close above 15,090, then we may start seeing another round of choppy movement, up movement to squeeze up towards the next resistance level at 15,240. All right, so that's pretty much sum up for the benchmark stock indices. So very quickly, let's jump on to the FX market. So over here, the FX market, let us start with the the major pair first. So for euro dollar, still no change. Euro dollar yesterday price move, yes, it inched much lower, but not as much as the sterling. So still holding below that. Yesterday you see it did another test up at the 1.059 pivotal resistance level, reacted off it and going to inch much lower. So for sure, this is a key resistance level in order to maintain that short-term bearish bias condition on the euro dollar. So still no change, 1.0595. Looking for a test in first step at 1.0490, a breakdown below it potentially sees us the next swing, the earlier October swing low area of 4th of October at 1.0450. But however, if you start to see hourly close above 1.0595, then this short-term bearish bias condition will be invalidated to see a squeeze up to retest the 11th October and 12th October swing high area at 1.0635. Okay, so RSI also remains bearish. No clear signs of a bullish divergence yet on the hourly RSI, indicating to us that the short-term bearish momentum remains intact. Okay, sterling dollar. Okay, reacted off the 20-day moving average, so we will be using a much tightened key short-term pivotal resistance for today, slightly above the 20-day moving average, which is the minor swing high of 13th of October and 17th October at 1.2220 key pivotal resistance. Looking for a breakdown below 1.2110 to retest this 3rd of October and 4th of October swing high area, minor swing low area at 120.50. RSI continue to remains bearish, lower high, no clear signs of a bearish divergence yet. Bullish divergence hasn't hit the oversold level, indicating to us that the short-term bearish momentum remains intact. But however, if we start to see hourly close above 1.2220, then this bearish bias condition will be invalidated to see a squeeze up to retest this next resistance level over here, which is potentially 1.2280 level, which is the medium term descending channel upper boundary. Then a break above it potentially exposes the 11th of October and 12th of October swing high area at 1.2330. Okay, so that's for the sterling dollar. So one more pair, cross pair I want to highlight for you is, given the fact that the sterling also is one of the weakest pair and the dollar yen is kind of sideways over here, we could actually look at the sterling yen pair. Okay, this is the hourly chart of the sterling yen pair. So the sterling yen pair over here, right, it has been kept by this medium term descending trend line since 22nd of August high. And also, if you look at the RSI also has starts to break down below a parallel support level. Okay, at the 37 marks, hasn't hit the oversold region yet. All right, so indicating to us that this bearish momentum in the short term still remains intact. So I'll be using this 182.95 as my key short-term pivotal resistance level, which is the range top or minor range top since 13th of August last Friday. Looking for at least a first step, a push down to retest this minor support level at 18125. A breakdown below it potentially expose this next support region at 1840/17970. All right. However, if we start to see a breakup above 18.25, then we start to see another round of choppy move to invalidate this short-term bearish bias condition to retest the 12 October swing high area at 18380. Okay, so that's potentially another way of looking at the FX market. By just now I share with you all the we call it rolling 5-day performance, and we could start to see a potential further weakness in the sterling yen, at least in the shorter term. All right, so that's for the FX market. So very quickly, now on the major commodities. So let's start with the gold price first. So on the gold XAU/USD spot gold, still recall that yes, since Monday we do have a bullish bias condition. For resistance already been made yesterday at 1949. Squeeze up above it. Price action on the RSI, there is no clear signs of what I call, yes, it's oversold and right now it's time to do a pullback. But once you do a pullback over here, the RSI going to shape higher high in line with the price movement on the price action movement on the XAU/USD as well, pardon me. So no bearish divergence, so indicating to us that the bullish momentum still remains intact, but notwithstanding for a potential pullback back again towards the 50 level. Okay, so with that, right, I will still be maintaining this short-term bullish bias on gold XAU/USD with a tightened key short-term pivotal support for today at 1927, which is the swing high of 17 October that confluence with the lower boundary of this minor ascending channel that is in place since 5th of October. Looking for a further potential push up towards the next resistance at 1970/1983, which is the upper limit of this short-term ascending channel. But however, if we start to see a 1927 breakdown, then we may start to see a deeper pullback towards the 50-day moving average, and as well as this former medium-term descending channel resistance turns into a pullback support confluencing at 1908 level as well. Okay, so that's for gold. So very quickly, WTI crude. So WTI crude will be the West Texas oil. So West Texas oil yesterday almost hit that lower limit of that 1930/91 short-term resistance zone that we highlighted yesterday in our bullish bias condition. Okay, so yesterday it printed a high of 19.18. Okay, very close to 1930. So with that, right, price action still continues to remain, it traded sideways after that, but managed to actually help above the 20-day moving average, acting as a support. So I do not want to use a so tight level for today at 87. 88 level. So I'll still maintain that short-term pivotal support level that we have yesterday at 87.30. Still looking for at least a test in this short-term, we call it ascending channel upper boundary at 90.30/91 resistance. Okay, which is also in terms of the Fibo retracement, the 61.8 Fibo retracement taken from the last push down. Okay, over here as well. So but however, if we start to see a breakdown below 87.30, then we may start to see a deeper pullback towards the 86 figure level, which is the 50-day moving average acting as a support for today. Right. So with that, that's pretty much sum up for today key highlights on my daily dose of market insights. So I do wish you all a great day ahead. And for a heads up, tomorrow I'll be on leave, so there will be no daily dose of market insights for tomorrow, Friday, and we should resume again on next Monday. So do have a great day ahead and a great weekend ahead, and we shall speak again on next Monday. Thank you. See you.